Nigel, who is Director, Digital Trade and Technology Policy with Crowell and Mooring Global Advisors, who will moderate our next panel on barriers to innovation in digital finance. Nigel, we welcome you to the stage. Thank you for taking the initiative. And we welcome the other panelists to the stage at this point. Thank you very much.
Good afternoon, everyone. Realise we're on the clock. Smooth transitions as always here at CSI, but it really is my pleasure to moderate this next panel, a key piece of the puzzle, bringing together digital and finance. And so it's great to have the opportunity with a couple of practitioners talk about what they're seeing in the world of how technology is used from a practical perspective in the finance sector, and then for me to then draw that out and connect it to the policy framework we're all working in. But briefly, I want to introduce Paul Cory, who's the Senior Manager for Cybercrime and Scam Disruption at Visa. Paul currently leads Visa's Cybercrime and Scam Disruption team, following a decade at the US Treasury. And then alongside Paul is Will, who's Managing Director, Head of Banking as a Service within Citi's payments business. Before this, Will was the global co-head of cross-border payments at Citi. And so lots of payments discussion and backgrounds, which is great because that's what I have spent some time focusing on. So just to dive straight in with you, Paul, and Visa, you've been looking closely at how Gen AI and Agentic AI, which are very now even interchanged or like very popular terms in the debate now, are changing the cybercrime landscape. What do you think are the most material threats you're seeing to payment systems today, and how are they evolving compared to the past?
Yeah, and thanks for having me. It's nice to be here with you all. I think really fundamentally just the ease of access nowadays to Gen AI enabled cyber tools, software, malicious software that cyber criminals can really easily scale their operations using, the ease of access to them, and the lack of skill set needed to actually use them really is driving that ability for cyber criminals and criminal organizations to scale operations against payments and financial sector more broadly. Nowadays, there's this phenomenon of cybercrime as a service, and these are professional cybercrime organizations that build software tools and sell them to other cyber criminals to use to help them with their criminal activity. So we've seen an uptick in this over the last couple of years. We talk about a lot these days about deepfakes and the use of deepfakes, and it really is, I think, pretty significant across industries as a threat vector, but particularly when it comes to finance and payments, we've seen an uptick in use of those video and audio types of deepfakes to impersonate others and to manipulate individuals into either scams or making payments on behalf of others, thinking that they're paying someone that they aren't. Actually, there's been a lot of examples of this over the last couple years, but one that really comes to mind is this multinational firm in the UK. Their CFO was impersonated by a criminal organization, and so they created this deepfake video of him authorizing the finance department to send $25 million, and it was successful, and the finance department thought it was actually him authorizing the transaction. So these are the types of things that we're seeing more regularly.
There's a good way to sort of just scare us about what's going on online. The next phase of it. Turning to Will, on the Genius Act and the broader rulemaking process, which is obviously a major development in this field of digital finance, where do you see the biggest risks that well-intentioned regulation could inadvertently create constraints as it relates to financial services innovations with some of these technologies we've already spoken about?
Yeah, first of all, Nigel, thanks very much for having me. It's great to be here and looking forward to the conversation. I think there's a few things top of mind to me when I look at sort of any general regulation. If you think about it, what's kind of unique about Citi is we're a big global organization. So we're in many different countries and we deal with a huge amount of complexity and regulation already. When you think about some new regulation coming in like Genius, like Mika, and you try and sort of morph that into what's happening in like the legacy infrastructure, I think one real challenge you have is any sort of additional complexity really creates an additional barrier to actually creating and leveraging some of the sort of the advancements that are trying to be made within that regulation, because you're really having to deal with like variations by geography. You're having to think about how you can deploy a global standard in that type of setup. It's a really tricky thing to try and do. The second area I would say that is a tripwire area to watch out for is any lack of clarity. If you leave very big things open to interpretation, the gray makes it quite difficult to operate. In fact, often you think about the best regulation, even though it can be sometimes a little stricter than you'd like, the fact that there's little interpretation or little interpretive space makes it quite a lot easier to implement. You can typically get it out there significantly faster. So lack of sort of clarity is a big one. And I think if you think about regulated financial services, FinCrime is a very particular area where the more clarity you provide, the better. So that's a sort of second area I would point to. And then a third one, which is probably an area where you can create friction when you're thinking about regulatory deployment, is things like regulatory arbitrage. So if you write down some form of regulation that essentially creates a different standard for the same type of activity, that usually can be an area where actually deployment is, sounds a little counterintuitive, but actually deployment can be quite tricky in scenarios like that as well. So I'd point to those three as pretty sort of sizable tripwire areas I tend to see.
I mean, it's interesting. I mean, part of the reason I enjoy working on payments and financial services is that they're heavily regulated entities already, but then you add in new technologies and new sort of focal points for regulation. And to your point, Will, like the complexity compounds. And when you already have highly sophisticated regulatory compliance regimes and they're struggling to figure out what does this mean and where is the uncertainty, like forget about the little guy who's trying to figure out how all this works and how they find their way through it. And it also just inevitably lends itself, as they design these rules, to tilting the rules in favour one way or another to local providers or local standards and such. And so hence the trade angle. Paul, one quick follow-up, just because I think it's such an important one to reinforce whenever we're talking about payment services and data. When we're talking about fraud and scams, they're inherently cross-border. How do constraints, whether around data access, system interoperability, or real-time information sharing, affect your and your team's ability to detect and prevent these frauds and scams?
Yeah, I think at Visa, we've done a really good job of making using AI proactively across our fraud and scams detection and disruption lifecycle to identify, detect scam activity or fraudulent activity across the payments ecosystem and across our Visa payment rails. To share that activity as quickly as possible with other teams that can actually take initiatives to block transactions when needed, to protect clients and their consumers, their cardholders, and then to actually disrupt the activity. Some of the constraints I think I see, that we see across financial services, I think is, one, for example, is just information sharing, the ability not only internally within global organizations to share across siloed departments and divisions, financial services, for example. There's anti-money laundering departments, there's separate fraud departments, there's separate sometimes sanctions compliance departments and cybersecurity departments as well. Sometimes there's silos there. Oftentimes there are silos there that create barriers to information sharing um, when you're trying to quickly identify bad actors that may be attacking your networks or exploiting them in the payments ecosystem. Another, I think, is as it relates to, I mean, all of this activity is consistently cross-border with the types of malicious cyber actors that are operating in one country and attacking networks or systems or exploiting cardholders across the payments network in other countries. So another barrier is the ability to, I think, to work with international law enforcement to actually get to the root cause of the problem. I think at Visa we do a pretty good job with this because we have law enforcement liaisons that work with international law enforcement across the globe to help take down scam and fraud rings at the source of the crime. Otherwise, you can get into this this model of kind of whack-a-mole, to just and with AI, you might be looking at one merchant or one bad actor where they're part of a network of thousands, and you're not really able to scale the detection and disruption of the problem when it's a significant cross-border network of adversaries.
I think it just has always stood out to me as one of the clearest reasons why data restrictions in and around payments data and associated data is so counterproductive, given how the free flow of real-time information is so critical to providing a service which every policymaker in the world wants to support in terms of countering fraud and cybercrime and such. Yet that framing and that analysis just still struggles to break through. It's the same in the cloud space in terms of sharing data for real-time cybersecurity sort of identification and reaction. And so it still blows my mind that you all, and I'm glad you're all still here and employed, still have to make these points in these cases, because this is the power of these tools and the power of data flows in this specific regards. Well, it also it dovetails into a similar but related question with, I suppose, the next wave of rules around digital finance and AI. How does what you're seeing, this next wave, impact the ability of you and your team to build and scale new products globally? When you come up with something new, how do you look at the world, and how does the regulatory landscape impact how a product's actually pushed out the door?
Yeah, so I'm going to sound like a stuck record today, because complexity is a real challenge. It is a genuine thing. And what I would say is that what's kind of interesting about finance in particular is it's a complex subject on its own, but it's impacted by so many other standards that are set. So when something's written around data localization or data sharing, 9 times out of 10, that's going to impact the financial services sector. When you think about things like local licensing or local FinCrime rules, that's going to impact the financial services sector. When you think about consumer protection, there's a huge long list of varying standards that all kind of converge around financial services just because of the nature of the industry. And I'll touch on something that Paul mentioned a little earlier around AML and sort of how you're getting into these new agent sort of worlds. I remember a couple of years ago, there was a great story which was about essentially a large-scale FMCG who was producing or tried to create a membership club where you could buy washing powder. But the way they did it was they had a little button that you used to stick on the side of your washing machine. And so you'd go and tap that button when you needed to get more washing powder, and washing powder would arrive at your front door. It was all sewn up and stitched together with an e-commerce provider. And what they found kind of interesting was there was a few cases where 20 pieces of washing powder would show up, 20 boxes of washing powder would show up at somebody's front door, and they couldn't really figure out why this was happening. But what they realized was children were watching their parents press the button and then standing there and pressing the button 20 times. And it's an interesting story to me because what it does is it tells you that in the age of authentication, in particular when it comes to financial services, we're not going to be authenticating people in the future, right? You'll be authenticating agents. You'll be authenticating items and tools. So this idea of like knowing your machine, know the machine, is like the new version of KYC, right? You're going to be doing KYM, which is a really interesting logical thing to be trying to deal with. And if you think about that in this like backdrop of all of this complexity that I've mentioned, the downstream and knock-on effects are pretty significant. And I think what that really means is when you look at financial services today and how we're thinking about new age technology deployment, the first is you're going to go where rules are the most clear, right? So where they're the most established and the most clear, that's very logical. But what that means in areas like AI, as an example, is where you're seeing most financial services groups start is efficiency. They're thinking about things like service. They're thinking about things like service agents. They're thinking about things like coding efficiency. They're not yet applying it to regulated financial services like payments and that type of thing, primarily because of how complex the rules are when they're stitched together with all of this other stuff that goes on. So just a picture I would paint for you about like practically what it takes to sometimes implement these innovative solutions and how you're gonna steer the ship towards the most level of clarity because that's where it's easiest to do it.
Yeah, which I mean points to where you're at, and that's a natural reaction in terms of where you have legal and market certainty. They'll be the ones where you experiment and you roll out. And I just know from other sectors when they review and compare and contrast markets, and there will be high risk compliance markets. And with new AI related products, they're being far more careful about what product gets rolled out where and when. And so for you both, really, when you and your teams and the business units face these new or old constraints, like what kind of business trade-offs do you have to make? Or what are you taking into account when you're considering a new product as you're rolling it out? Do you delay it? Do you consider localizing it? Do you adjust it? Like, how does it actually impact what you do next? Either or.
I'm happy to start if you like. Sure. I think that's the perfect answer, to be honest. Like you've hit the three, like you delay, you change, or you kind of localize. What I would say is there's a couple considerations that we tend to think this through. The first is you've got to start with the business case, and often that comes down to how you link back to what the client wants, right? So even if you've got a fairly high hurdle, you may still decide to do it because there's a business case that makes sense because there's 10 clients that need to be in that market. It's a material market and it matters. But I think the reality is usually a little bit more nuanced than that. And so what tends to happen is you go back to what the regulation or the local rules require you to do. You may look at whether you can modify the solution enough to do that. And then you've got to go back and test it with clients, because the truth is you're going to get a couple of different client archetypes. Some clients are going to look at that and say, we can't use the product that way. And as a result, then you have a viability question, which is a real problem, right? That to me, the biggest barrier to deploying new tech is if the regulation is too onerous, clients simply won't go there. And then the reality is for financial services, why would you deploy into a location where a client is never going to use the product? So the business case has to make sense, I think, in the first order. That's kind of one area I would start. The second is you do absolutely make trade-offs, right? If I look at our global footprint today, 90 plus markets, you're constantly making decisions about where you deploy new technology and where you deploy it first. I will say markets where there's data localization requirements or technology localization requirements tend to be the most tricky to do because they are the most expensive to do, right? It's not really much more complex than that. So your business case hurdle is significantly higher primarily because you have some of those requirements. It's the nature of the beast. And then the second becomes, well, if you've got 10 markets, you can do fairly easily because you can apply a global standard, you can offshore data, you can use centralized technology. The advantage of doing that is you can potentially bundle all 10 into one go. So there is efficiencies of scale about having the kind of global playoff that I have. So I would say a lot of it comes down to what you're doing with clients. That's a really important sort of first consideration, and then teasing out what the business case is based on what you're required to do in country.
Anything to add, Paul?
Yeah, I piggyback on a couple things there. I think for us at Visa, I think one thing that we really rely on is staying ahead of threats by threats to the network by proactively doing intelligence gathering to anticipate what might be coming and to try and identify potential solutions as early on in the kind of attack process as possible. So that includes just being involved with working closely with vendors, working very closely with clients. We rely a lot on clients to help share indicators with us of and signals of potential of anomalous activity that we need to make sure ecosystem wide is addressed across the ecosystem, across our network. And then we're also we rely heavily on building compliance controls and actually enforcing those controls. So like the team that I run is a scam identification and disruption team. And recently there's a new compliance and enforcement framework that was set up. So it actually holds members of the network accountable if they are engaged in activity that is against Visa's rules. And then, we're constantly working with those clients and other clients to help improve the overall security and safety of the network.
No, I think what it also this discussion just reinforces to me in the context of trade is the critical role of the Treasury Department. And I know they've been doing more and more work around AI and cybersecurity and identifying and working with their international partners in trying to address some of the underlying issues to make it easier for your respective firms and the rest of the sector to do what they should be trying to do in terms of engage in providing cross-border commerce. But that's tricky. Obviously, financial services and trade agreement has a wonderful history in the US trade, a series of trade agreements, but that it continues to evolve, which is the main thing because it has to account for sort of the latest technology and trends and regulations. But with that, please join me in thanking our panelists for such a useful discussion around digital finance and tech.